people, welcome back after the break. So let's get our discussion ahead with preparation of financial statement. So till 13th done, let's go for 14th. Now there are hardly two more concepts you could say roughly. Based on that, some small chintu pintu questions are there. So let's get that done. Okay. Once we are done, acha bye bye. Okay. Pakka before 9:15. Don't worry. Okay. All right. Most probably looks like 8:30 only. Who knows? Now look at that Mugulu Nage, full smile, automatically back. Yeah. Yeah. So that is probably our best statement that I can call out for you, right? Okay, we will try. I have like another 6 questions to be done when I'm done. Okay, 9:30. Yeah, sure, macha. Don't worry, these are all not big questions. These are all 10-15 minutes wala question max. Okay, listen. Shante. Kapadkale. Question number 14. Come to question number 14. State under which head these accounts should be classified in balance sheet. You need to tell these components will come under which category. First one. Share application money received in excess of issued share capital. So let's say share got allotted worth only 10 lakh, but shareholder paid 15 lakh. Shareholder paid how much to the company? 15 lakh, but share got allotted only to the extent of 10 lakh. Because in case of excess allotment, company does pro rata allotment, no? So what will the company do with that excess money? Keep it or they have to refund it? That means company will have a liability to refund that amount. Can they refund after 12 months or immediately? So where it will come? Under current liability, specifically under which one? Other current liability. So if you have received any excess money, company will have an obligation to refund it. So it comes under current liability, specifically under other current liability. I think this came in one of the paper for 2 mark or something. They asked this question as a theory question. Share option outstanding account. Share option outstanding. Now remember people, when employee stock options were given, ESOP, remember? There we had some ESOP outstanding. Where will that come? Actually, it depends, okay, on the type of shares given. Okay, but here more about that you'll learn in Ind AS 102 CA final. It can be a reserve or it can be a liability also, depending on what instrument you have given to your employee. If shares are given, then employee stock outstanding will come under reserves and surplus. If something else is given, we say we leave. Okay. So yeah, there's something else given that that means it is liability. ICAI assume that it is a shares given. If it is shares given to employee, employee stock option outstanding will come under shareholders funds under the heading reserves and surplus. Okay, people. This is called share based payment reserve. We call it. You learn about it in CA final. Don't worry. For now, just remember it. This accounting will take care of it in the next level. Okay, Sarji. I think we did in one problem. Remember in buyback may we got employee stock outstanding. That will come under reserves and surplus. Okay, this can change, but now let's follow ICAI Zindabad wala answer. Unpaid. Matured debentures and interest accrued. Sir, if it is unpaid means obviously it's a liability. And has it already got matured? Sir, if the debenture ka due date has come means can you delay the payment or make it immediately? I mean, this will be a non-current liability or a current liability. This has to be shown under current liability under other current liability because debentures have got matured. So you have to pay it immediately now. Okay, now. If it is not matured means then you can show it under long-term borrowings provided the settlement is beyond 12 months from the balance sheet date. That rule. Here it's already matured. So can you delay it or you can't? So hence it comes under current liability, specifically under other current liability. Uncalled liability on share and other partly paid up investments. Sir, uncalled liability on shares means final call money not yet due. If it is not even due means will be past journal entry. That means what is this? All these are what? Contingent liability and commitments. So these are basically like absolutely no. It is from actually from not from the company perspective. It is from the shareholders perspective because they're talking about partly paid investment. We have purchased like here. Let's say the face value of the share is 100. We have purchased some investment, equity, some other company ka equity shares we have purchased as investment. How much money is this? 100 rupees is a face value. But company asked us to pay only 70. That company asked us to pay only 70 and we paid how much? 70. How much we have not yet paid? 30. Is it calls in arrears or company did not ask? Company did not ask. Now this 30 is our liability. Yeah. No, it is what? Contingent liability at this point. When they ask, we will pay. That time only it will become what? Our liability. Yes or no? Till then it will be shown as just a commitment or something of that. Contingent liability at best you could say. Uh, okay. Sir, what is the point in learning 4 feature pro rata when it comes won't in real life? People like that, everything we can't attach to real life. Some are meant only for exams. Okay, so we'll have to learn it in some and purely exam context. I say also needs to test few things, Noda. So everything if they like practical life. In practical life, you never pass journal entry like this. So you do it in system. In fact, practically, if I have to tell you, if I take you to one of the companies, ask you to pass a single journal entry, not one of you will be able to pass even single journal entry. 100%. Not even a doubt. Why? Because it is all template. Excel template. It will not even look to debit to credit. One Excel will be there where you update some amount and some button. It was all text you for me in my something. Some button we used to press. Automatically it will go. It's all template. It'll not be in debit credit format at all. It's purely in Excel format and system that Excel is integrated with Oracle or SAP and it will push. So you'll not even on maybe one entry if you pass, then you'll be like, got it. First time you pass the entry, you'll not even know what is this. This is journal entry, you'll ask because it look like a statement. I'm just saying practically. So ICAI, can they bring it now practical aspect and give you SAP access? No, so it will not work. So some are purely from exam perspective. So don't worry about that. Okay. So for now, let's get this done with. Okay. Calls unpaid. Calls unpaid. Calls unpaid means calls in arrears. Calls in arrears, where it will come? Under share capital as a positive or a negative number. As a deduction from share capital. So that's one. Money received against share warrant. This is like your share application money pending allotment, where you used to show. You remember when we discussed balance sheet format, there is something called share application money pending allotment. Same thing here only. Money received against share warrant. It will come under shareholders funds only as what? Money received against share warrants. Because this is also eventually what? Same thing only. It will become a share capital eventually, not now. So hence it will come under this category only. Just know this. They are not that very important. Once in a while, these sort of things come. Okay, 14th one, Damaru. That's all. Can I move on to the next one now? Everybody. Now, people, we have 4 questions. We have 4 questions that is based on one concept. So, actually, yeah, you could say 2 concepts, two questions for each concept. Totally, we'll have to do. Okay, now, people. So that's all is this next 4 question. So I'll make 15th question as an LDR. First, maybe once I'll call it out for you. Then maybe take up question number 15. Easy only. This also is used to be popular in old syllabus. Maybe now also they can easily ask this provided in the MCQ based setup. Beyond that, I think these are all I think 2 marks questions. So beyond that, little doubtful. So yeah, anyway, asking this questions is I see a headache. Let's cover them. What is this? There is something called maintenance of capital. Maintenance of or maintenance of financial capital, or maybe I'll write some things. This main array. It's not allowing me to write only, Noda. Wait, pa. Oof, oof, oof. If I hold it at the very top, I'll not. What? Hey, people, stop putting kano. What now? This is not tap. That is his pen. This is normal. There is no tapping here. Allow me to write, please. Okay. Maintenance of financial capital. I'll write off quickly, quickly, quickly. I'll write off. Maintenance of financial capital. Okay, sir. Backbench guys. Yeah, those backbench guys are only disturbing. Yeah. I thought they'd become our friends. We've been meeting for many days now. Still, friendship is not established. Maybe by the time casting gets over, they may become your friends. Hmm? Ah, yeah. By the way, how many of you are scared of all this? Like, even the talks of this kind of sends you chills down the spine type. Talking is okay, but horror movie is a big scare. How many of you like horror movies? Like into it, purposely watch it? Okay, look, 1 minute, 1 minute. How many of you set the mahal and then watch? Like close the curtain, night times, when nobody is there, high volume, yeah, what is it now? You will keep on easy. I'll keep candle also. Next, you'll keep Ouija board also. Okay. Yeah. Thrill is there, no? Yeah. But obviously, Dugu Dugu will be there. Oh. At least if you keep the, maybe in house, you may not get that feel because of sound. Oh. In theater, I think. What is the recent good? I don't remember recent seeing any good horror movie. Last mine was some Conjuring ka some part. That was the last. Latest one I did not see. Latest one is good. Welcome to Delhi. Where? Hotstar. Huh? Hindi, huh? English, huh? Okay, fine, all right. Maybe I'll give it a shot. Look at our Mohammed Ibrahim. He's sending memes now. Zuyanta, huh? At night, all my family members are asleep and watched horror series with my headphone. Ah, that must be thrilling. Great. Now they started full horror mode. Huh? I think I spoiled you. Okay, come back. I'll ask those guys now then. Huh? Okay. Maintenance of financial capital. Okay, write this down. So there are two ways through which you can maintain financial capital. One is historical cost method. Historical cost method. Another one is, or maybe under historical cost method, you're right. Whatever profits is made, hey people, come out of the horror ka zone, da. Right this so. Whatever profits is made in the current year is withdrawn as drawings. Is withdrawn as drawings. Next one, current cost method. Current cost method. Under that, you're right. My God, so much interesting topic that was, I think, for you. Still now they're doing they're discussing probably made in Delhi ka story, na. No, your own story you're discussing. Oh, you have experienced, you have actually experienced a real life scenario. Anyone else? You had a. Ah, it is in your house only, Ada? And you still sleep in the same house. It was your old house, huh? And you actually felt it's coming closer to you. Okay, deep sleep. Good. Probably in your experience, it was real. That can be something, you know. I don't know. I've not experienced. Yeah. Huh? I'm scared for sure. I've tried. Okay. Okay. If I started it, huh? Okay. Yes, there was something on my bucket list which I wanted to try. I just wanted to experience. I'm scared for sure. Matlab, not normal mein no, movie and all is fine. Movie and all is manageable for me. I just wanted to give it out the real experience. So once what I again people, this is just something which I'm sharing. Don't follow it and don't give it on me, people. Okay. As I told, I've done a lot of stupid things in my life. This comes in that category. Okay. I think I should not share. Where I feel little buku buku will come on to me. Okay, fine. I had this particular thing that 1 hour I have to spend in the Samshan Ghat graveyard. Okay, matlab what I night 12 o'clock. So took my bike long back. Took my bike. Obvious. If you have another company, then there is no fun. Went to the bike. Oh, okay. Went to the graveyard. Oh, didn't get the courage to go in. Reach the Shamshan Ghat to stop the bike. Oh, you know how 12, back then I think I was talking about like I had bike like a long back about 12, 13 years back. Okay, so back then we didn't have. Now at least 10:30 also 11 o'clock also you find Bangalore is buzzing now. Almost in every area you have someone or the other keeping. But 10, 11 years back, in fact, people this side, this Banargata side, Vega City Mall and all is there that side, no? They used to call it as forest. Beyond 8 o'clock and all, 10, 15 years back, if you say I'm going near that side, they say don't go there. It was hardly developed, no? Yeah, full, it was like forest only. Okay. So once I taken the bike, I stopped near that bike, didn't really get that much courage. Oh. Initially, I was like, will do, power. But when I got there, full to ski. I'm sitting in the bike, oh, bike off to. I'm looking at the Samjan Ghato. Like, yako beda ansta ide. We will try next time. Then it's like, okay, instead of 1 hour, maybe I will try 20 minutes, 15 minutes. Slowly, I kept reducing the target. Not 1 hour, maybe half an hour. I think I stayed only for 15 minutes stops, I think. Okay. But I stayed. Oh, I was actually counting. Biryani, no? Because it was like really like hardly anything out there. Okay. So it started really like, when you're scared only, you get too much of unwanted background music. Oh, dog started calling. Like, no. I think in my experience, I think I stayed for maybe 15, 20 minutes maximum. I don't think so beyond that. Okay. So, but I'm a little proud. I was proud of it after I came back. But as he was saying, when I started my bike, I had a feeler somebody is following me. so, so 10, 15 minutes, it was actually quite difficult. I mean, yaro barta idare. Yeah. So, yeah. So luckily, yes, couple of days I still had those. Matlab, when the lights were off, I used to wake up suddenly. So 2, 3 days I had that particular hangover, you could say. 2, 3 days. I didn't see anything. But yeah, in my mind it was there. But I still do have that, like, kind of few things like Agoris and all they show, right? I'm a little fascinated by their lifestyle, the extreme dedication with their show. Not what they follow, it is just that to go to that extent to for a certain belief says a lot of dedication. So I watched them. Once I'd also done it in forest. That was actually lately I had done. I walked in a particular forest with no, matlab, proper forest, no? Torch chala, mobile ka. It was actually like half an hour. Actually, what has happened is, from the place where I was staying, I'd been for volunteering. Don't ask where and all. I'll not tell. Okay. So from that place to the bus stand, right? So it's about 10 minutes drive maximum. But if you walk, it's about half an hour. So there are two paths. One is a forest way, another way is there. Another way is normal way. Okay, where there are some lights and not that many lights, but still manageable. But there is another way, it's totally forest. Okay. So I was like, this time around, we'll go in forest. Okay, we'll try. I think it was around not midnight and all. I think my bus was around at 9 o'clock, I think. So I started around 8:15. But there is no light. It's like almost 20, 25 minutes, you don't get any light. So inside the forest with my backpack. It's like, okay, we will try this. So that was actually nice. Scared, for sure scared. I'll not deny that. Okay. I'm pretty sure that was not my walking space. I was not walking. I was like, that all feeling. Oh? But yeah, it was actually good. No, I wanted to try that once. So yeah, I did that. So yeah. I didn't experience anything just in case you're asking. In my mind, it was there. Yaro battare. No. But than that time I was also scared for the animals. Usually in that area, they told nothing will be there because we have some setups there. But still, you never know at 8 and all, when almost everything is shut, right? When you don't have lights, you might encounter something. Luckily, I was not nothing. Yeah. So yeah, that was a bit a small experience. Auja is real, sir. I don't know, pa. If you say so, I've never tried. Mohammed Abram is saying Auja is real. You have tried, macha? Huh? Whom did you interact, da? Okay. But again, people, just don't try it because of stupidity. If you want to explore something, it's your call. It's your personal business. I'll not interfere. It's totally your call. But I am not responsible. Okay, your thing, your life, your zindagi, your jando. Okay. Yeah, I will not interfere. Huh? You have tried Ojo, is it? No. Nothing happened. She's saying something happened. So all that movement and all is just like that, huh? Hmm. Any of you, like he said, he has a real experience. Anyone else who has that real experience, like kind of felt it in your things? He probably has a pranking experience. Huh? Hostel may you have had it, huh? Actually, it is believed that it's haunted place, huh? Seniors, they made believe. Let him complete. Huh? 12 o'clock or 2 o'clock? On the compound, someone was sitting, huh? You actually saw that. He's like, someone is sitting. Macha, you never know in boys' hostel what and all will happen. That might be your friend only. To Salpa Malya Jasti agi might be sitting out there. You never know. Yeah. Sorry? Everything will be off. Hmm. Online, Mohammed Abram is saying, Oja is real, sir. Real response will come, sir. He has experience in Oja board. Hmm. Akshay also has a. Akshay, you have a macha? Oh, which one? No? India ka Oja experience or China ka? Huh? Okay, 1 minute, people. Yes, da? Your experience and also tell me your experience. Let's see. What have you experienced? Okay. Uh-huh. Ah, okay. Mm. Mm. Matlab the light, the shadow thing. So. Mm. Before that, you saw any movie? No. CA foundation got manifested in the form of that. That could also be the case, you know. Okay. The so anything happened beyond that, or it was just a flicker and went? Okay, nice. There was a rumor that somebody died in our school bathroom, and whenever we hear wind sound, we used to get scared. School mein many rumors are there like this. I know. That is nice. Mohammed Abram is saying in Auja board mein he got a response of the name ante. They told their name ante. Yeah, my mother used to tell the same. What name you got, macha? What name you got, da? You have tried, or this is someone your friends have tried and they're telling you? All right. Okay. Bye. Okay. Enough da. Now. Jai Oja. Look, right this. Okay, over. First we'll finish this and then we'll discuss somewhere else. She's saying real humans are more than scary. For sure. 100%. No doubt about that. Let's start, sir. Let's start with the real human things. Yeah. Yeah, I can believe you. Okay, current cost method. Write down first, people. Here, mein, full profits are not withdrawn. Or must first point you right. Restate the opening equity. Restate opening equity at current cost level. At current cost level. In bracket, you can write using index. using latest price or index. Okay, next one. Full amount, full profit should not be, or full profit is ideally not withdrawn as drawings. Okay, write down these 2 points. I'll tell you more about this in problems. Let this be there for the time being in our notes. Written. Oh my god, I think I switched on something. No, matlab, you guys are going non-stop at it, no? So, I think I probably stayed, tick off the wrong topic, I think. Good topic, huh? Yeah, fine, okay. And right, quickly write. We'll finish this and then maybe we'll see. They also predict about 2025 RCB trophy. I think RCB this time is on a roll, no? 3 trophies almost, I think, right? Two women trophy. This time women we won, no? So 2 women trophy, 1 men trophy. So on a roll, 3 trophy continuously. Jai RCB. Okay, right. Huh? Recording is happening. He's telling recording is happening. Are you okay? Recording students are also telling Jai CSK. They are telling. My majority of recorded students are Tamil Nadu students. So they are telling Jai CSK. Sure, Jai CSK also. Yes, finished. People are next. Next 20 minutes. We are. Let's try to get this thing sorted. Small concept, but try to understand. Could be important for a 2-marker. Can we start with the problems? Okay, question number 15. Let's keep it as LDR. Okay, complete Mauna. Mohan started a business on 1st April 2017. Underline 1st April 2017 with 12 lakh represented by 60,000 units of 20 each. So they started with how much capital? 12 lakh. And they use this capital to buy how much goods? 60,000 units. Purchase prices 20. 60,000 into 20 is 12 lakh. Enough. Concentrate. This is important. Yeah. Next. Complete. So capital is 12 lakh. Use that capital to buy 60,000 units of goods at a unit price of 20 per unit. Oh. During the financial year ended 31st March 2018, he's a trader, Mohan. He sold the entire stock for 30. Entire stock means how many units? 60,000 units. Purchase price how much? 20. Selling price is 30. Okay, in order to maintain the capital intact, calculate the maximum amount that can be withdrawn by the Mohan if financial capital is maintained at what level? Historical cost. Okay, so let's understand. There's a solution. Leave that out. We will solve it. Okay, question number 15. First, people, can you tell me what is the opening capital? Opening capital, I'll call it as opening equity. How much is opening equity? 12 lakhs. This is given. Any problem? Okay, everyone. Shh. Second one is find something called closing equity. Find something called closing equity. Basically, capital. Capital, we're just calling it as equity. That's all here because that's the way ICAI present their solution. So I'm using the same name. You can simply also call it as opening capital and closing capital. Now check everybody on the screen. Did you sell the goods in the current year? Yeah. At what price? 30. But you purchased for how much? 20. Have they given, that means you sold this goods at a loss or a profit? Profit. Have they given any other expense, any other income or no? That's all. That's all. That means no other income, no other expense. How much profit did you make? You bought it at 20 rupees. You sold it for 30. That means you made how much profit? You made 10 rupees profit on one goods or one unit. Yes, sir. 10 rupees profit you made on one unit. How many units did you sell? 60,000. So total profit is how much? 6 lakh. Clear, Sarji? Due to profit, your capital balance will reduce or increase. How much was your, or in fact, if you want to get closing equity, can I write like this? Closing equity is nothing but opening equity plus profit minus if you have withdrawn any money. Minus if you have withdrawn any money. If you do that, you will get closing equity. Now calculate, people. How much was opening equity? 12 lakh. Did you make any profit in the current year? Yeah. You bought it at 30, you sold it for 20. How much profit you made? You made 10 per unit. How many units did you sell? So total profit is how much? 6 lakh. Have you withdrawn the amount or we have to calculate the drawings amount? We have to calculate the drawings amount. So far, how much is the drawings? Nothing. That means what is your closing equity? 18 lakh. Yes, no, Ji? 12 lakh plus this is 6 lakh, which is 18 lakh. Any problem? All good, everybody? Now, check for a minute, check the screen. Sir, we are maintaining. You already copied. Okay, I wanted to give the heading. I thought I'm explaining, you're watching. Okay. Sir, you are maintaining financial capital under what method? Historical cost method. That we will write it as a heading. Capital under financial capital under historical cost method. Financial capital using or under historical cost method. In historical cost method, what they say is, if your opening capital, listen everybody for a minute. Next one, maybe if you want, we can do it together. What historical cost method says is, we know historical cost means what? Original cost. Originally, how much was your capital? 12 lakh. So every year you maintain 12 lakh. That's what historical cost says. You started your business with how much capital? 12 lakh. So maintain closing equity also how much? 12 lakh. But is your closing equity 12 lakh or 18 lakh? 18 lakh. That means from 18 lakh, you have to bring it down to 12 lakh. So you have to reduce by how much? 6 lakh. Why will equity reduce? Because of drawings. If you draw the money, capital will be same or it will reduce. That means how much can you withdraw over here? 6 lakh. That's what they asked. What is the maximum drawings? Maximum drawings will be how much? So can I say it is 2 minus 1? Or maybe 18 lakh minus 12 lakh. How much is that? 6 lakh rupees. So from 18 lakh, if you withdraw 6 lakh rupees, capital will reduce and it will become how much? 12 lakh. And what is your opening capital? 12 lakh. That's what historical cost method says. Maintain your capital at opening capital level every year. Meaning that's what we have written the point here as. If you want to maintain the capital at opening level means whatever profits you make in the current year, you will keep it or you will withdraw. You will withdraw. That's all. You will not retain any profit. You will go on withdraw. So that way your opening capital itself will become your closing capital, or opening equity itself will become closing equity. Any problem? That's all is this question all about. Easy. Okay, write this down. No, copied also. Okay, fine. Maybe some of them may be writing. Others can review the next question once. Question number 16. If you're done. Same. One more for practice. That's all. You can do it. Same format you can use and do the next question if you are already copied. Everyone has copied. I don't see any hands moving. Can I move forward, people? Online also then? Okay, let's look at question number 16 now then. A trader, same people, they will tell, okay, whether it is historical cost or current cost, they will mention to you in the question. A trader commenced the business on 1st January. 1 minute. Sir, why do we have to do this? Just a way of maintaining the capital, macha. Nobody follows. Again, only for the sake of marks. That's all. Nothing. This, in fact, nobody does. This is foolish. Next method at least is reasonable. This is total foolish. Okay, why? I'll tell you when I come to the next method. Again, purely for the sake of marks. No practical application. A trader commenced the business on 1st January. That means here maybe the year is Jan to December. With what? 12,000 rupees. Represented by 6,000 units of a certain product at 2 rupees. I think 10 they cut off first. Instead of 12 lakh, it became 12,000. 60,000 became 6 lakh. That's all is an adjustment over here. Okay. So, using this 12,000 capital, you purchase how many units? 6,000 units. By paying, what is your purchase price per unit? 2 rupees. During the year, the trader sold all the units at 3 rupees. And he had withdrawn how much? 6,000. Now you need to comment whether historical cost method is maintained or not. Okay. But anyway, question number what? 16. Question number 16. First, point number 1. What is your opening equity? Opening equity is 6,000 units at 2 rupees each. In fact, they have only given this. How much is this? 12,000. What is your closing equity? How do you get closing equity, people? Take the opening equity, add the profit, deduct the drawings. I've already written it here, so I'll directly write it. It's fine with you? Okay, opening equity 12,000. How much profit you made? You sold it for 3 rupees. You purchased it for 2 rupees. 1 rupee profit you made for 1 unit. So on 6,000 units, how much profit? 6,000. This is the profit. Did you withdraw any money? The entire 6,000 they told has been withdrawn as drawing. That means what is your closing equity? This is 12,000 plus 6,000 minus 6,000. How much is it? 12,000. How does historical cost method work? Opening equity and closing equity will be same. Is it same? Yes. Therefore, what is the conclusion? Therefore, capital has been maintained under. Capital is maintained under historical cost. Capital has been maintained under historical cost. This is not that popular. Next method, sometimes they ask. It has come. I mean, this also can come. Not that popular, you could say. 16th question over, people. You also feeling so? Can we get to the next question? Anybody still copying? Okay, copy. Done now. As long as the opening equity and closing equity are same, we say capital has been maintained under historical cost model. Historical cost means that only. Maintain your closing balance of capital same as opening balance. Every year you keep doing the same thing. That's what historical cost of or financial capital maintained under historical method says. And now let's go to question number 17. And now what is this is? Now this is not historical cost. This is maintaining capital under current cost method. Now people, everybody check the screen for a minute. Historical cost is quite stupid. Why is? Check. How much money you had at year beginning? 12,000. How much profit you made? 6,000. If you withdraw off entire 6,000, how much money you will have at the end of the year? 12,000. Correct? Huh? Now people, use your common sense. If we have purchased and sold 6,000 units last year means you would like to do the same activity at least next year also. Minimum would you would like to purchase and sell how much in the next year? 6,000. Ideally more, but at least current year may if you have sold 6,000 units means next year also we should be in a position to purchase and sell 6,000. Ideally we want to grow, right? You want to reduce the activity or increase the activity, or at least activity you should maintain at what? 6,000. Now people, last year you were able to purchase that product at what rupee? 2 rupees. Every year price of the product will be same. Huh? No, due to inflation, cost of the product will go on increase. Now let's say next year it became 2.5. Next year by chance it became 2.5. How many units you want to buy? 6,000. Now you tell me how much money you need. 15,000. Do you have 15,000 or only 12,000? 12,000. That means with the 12,000, can you buy 6,000 units? No. If you have 12,000 rupees money and if the cost per unit is 2.5 means how many units can you buy? Definitely not 6. Lesser than that. How much is this? Calculate this. 4,000. 4,008. 4,800 units. Now you tell me, would you like to be in this position? Huh? No. Now you tell me, that means should we really withdraw all our profits or keep some? Keep some so that at least we will be able to purchase how many units in future? 6,000 units. That's what current cost method says. Don't withdraw entire money because the price of the product will not be same. Price will go on increasing. If in first year if you purchase 6,000 units means second year also you would like to buy at least how much? 6,000. That much money you need to maintain. So if you withdraw off entire money, you will not be able to continue the same activity in the next year. That's what is the note. Understood? Huh? So full profit ideally is not withdrawn as drawings under which method? Current cost method. Here we'll have to do something. What to do? This point you'll understand when I do the problem better. Can we look at that problem? Okay. Come to question number. Which question is this? Question number 17. Okay. Come to question number 17. In the previous question under question number 16. Okay, let's get that previous question ka data once more. What is that previous question ka data? You bought how many units? 6,000 units. Mentally capture them. 6,000 units you purchased at what price? 2 rupees per unit. Okay, fine. This is what you did in the previous problem. Okay. Maybe if you want, I'll replicate the data once again here. 6,000 units you purchased at what price? 2 rupees. That's what you have done. Okay, now people check. Suppose in the previous question, that is question number 16, the average price index at the beginning and at the end of the year is 100 and 120. This we call it as consumer price index or whatever, right? Which measures the price of the product. At the year beginning, how much was the index? 100. Now it has become how much? 120. That means it is same or it has increased? Sir, due to inflation, price of the product will increase, no? From 100, it has become 120, means there is an increase of 20%. That means next year, will the price be 2 rupees or it will increase? Increase. So it will not be 2 rupees, it will increase by 20%. Yes, sir. Everybody good, 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 good. Now entire 6,000, if you withdraw, will you be able to buy same 6,000 units in the next year or you can't? You can't. So here we have to do something. Everybody got it? Yes. All right. Question number 17. I'll do it over here. Once again, I'll read the data. How many units did you buy in the year beginning? 6,000 units. At what price? 2 rupees per unit. At the year beginning, the index was how much? 100. At the end of the year, that price, the consumer price index or the price of the product index has become 120. Okay, first we will start. Here, this is what, sir? Financial capital under what method? Financial capital under current cost basis. Under current cost basis. Maybe one problem, it's only 2-3 lines. Can you first observe and then write? It's hardly 2-3 lines. Next one you can do it on your own, same format. Just stay for a minute and understand this. Easy only, but yeah, still observe. Can you tell me what is your opening equity? Opening equity is given in the question only how much? 12,000. First, what you'll have to do is you have to restate the opening equity here. I'll tell you why in a bit. First, we will follow the steps. Restate or opening equity restated, I'll write like that. Opening equity restated using what did we use here? We are using index, no? Using the index, we will write. Using the index. What is that is? Very simple. Sir, 12,000 was your capital. Or maybe I'll write here index or same people. Today we purposely invited them. So it's okay. It's not their mistake. It's our mistake only. Okay. Index capital. Sir, people at the beginning of the year, how much was index? 100. At the beginning of the year, index was 100. And how much was our capital? 12,000. At the end of the year, if the index 100 or 120, that means how much is your capital? You need to restate your capital considering the index. So how will you get this? So basically 12,000 represents 100 because 12,000 was a number when the index was 100. Now is the index 100 or 120? How much is this? 14,400. Multiple ways to calculate. From 100, if index has become 120 means 20% increase. You can add 12,000 ka 20%. You will get the same number. That way also is okay. I believe in proportionate method of doing it. Easy now, people. First, you do the restatement of your opening capital using the index or price, whatever that they have given. Now, closing equity. Closing equity. Sir, how do you get closing equity? Actual opening equity, which is 12,000 plus profit. How much is the profit? Should I have to calculate again or already done? You already did. Here we calculated. Now, how much is that profit? The profit here is 6,000. And that's it, or you withdrawn also? It's same as last question. Last question, you withdrawn how much? 6,000. You made a profit of 6,000 and you withdraw how much? 6,000. What is closing equity? 12,400. Okay, Sarji. Everybody good? Now you check retained earnings. Retained equity or retained earnings, we can say. That is nothing but your 3 minus 2. 3 minus 2. How much are you getting? 12,000 minus 14,400 is how much? 2,400 negative. First I'll write off, then let me explain it to you. Retained earnings is 2,400 negative. So therefore you'll write the conclusion as conclusion. Point number 1. Since retained equity or retained earnings, you could say, since retained equity is negative, comma, since retained equity is negative, comma, trader has not maintained capital using is not maintained capital at current cost. Sometimes they'll also ask you maximum drawings. Maximum permissible drawing is equal to 6,000 minus 2,400. How much is this? 3,600. Okay, write this. I'll explain it to you what we did here. First, update. I know some of you would have not got this. No issues. Update, I'll explain. Or do you want me to explain, then you'll write? What is it? How do you want? Explain. Okay. They're saying explain, it will become easy. Sir, very simple. Oh? Now, in the current year, trader made how much profit? 6,000. And did the trader retain any money or full withdrawal? Whatever profit made, trader withdrew. So, hence, closing balance of equity is 12,000. Agreed? That means check. Visualize simple. Opening May, at the year beginning May, how much cash trader had? 12,000. He made how much profit? 6,000. That means cash balance became 18,000. Again, he withdrew 6,000. So, cash balance is how much? 12,000. That means at the end of the year, trader has how much money with them? 12,000. So far, good. Now, people, last year, if you have purchased 6,000 units, or this year, if you have purchased 6,000 units, means next year also you should be able to purchase 6,000 units. Yes, sir. This year, you were able to purchase the goods at what price? 2 rupees. But is index same or going on increasing? This year, if you purchase at 2 rupees means, this is for current year. Next year, will the price be 2 rupees? No, price will increase by 20%. How 20%? This year, goods ka index. At the year beginning, the goods ka index was how much? 100. At the end of the year, it has become 120. Calculate the percentage. 100 has become 120 means increase in percentage is 20%. Or you can also calculate like this. 2 rupees is the price of the goods when the index is 100. When the index has become 120, how much would be the price? 2.4. Now, one unit now will cost you in the next year how much? 2.4. Yes, sir. That means to buy 6,000 units, how much money is required? How much amount is required to buy this 6,000 units? For one unit, 2.4 rupees. For 6,000 units, how much? 14,400. That much money we need to have. Do we have 14,400 or only 12,000? With 12,000, can you buy 14,400 worth of goods? No. That means trader has maintained capital adequately or not maintained? That's a conclusion. Yes, Saji. Everybody good? Because he withdrew more. That means how much they should withdraw? How much they should withdraw? Basically, how much money you need to have? 14,400. That means full amount of 6,000 can you withdraw? No. How much can you withdraw basically? 3,600 only you can withdraw. How? Okay, check. How much profit you made? 6,000 rupees profit you made. Correct? So, in that, how much price has increased? From 12,000, it has become 14,400. That means 2,400 you'll have to keep. 2,400 you'll have to keep because price of the goods has increased. Last year you bought it for 12,000. This year you will buy it for 14,400. How much has the price increased? 2,400. That much you need to retain. In 6,000 May 2,400 you have to retain means how much can you withdraw? Only 3,600 you can withdraw. That's all we have presented over. Common sense, that's all. Okay, Naji. That fancy terms we are representing. Once again explaining. Okay, fine. Last or current year mein, how many units did you buy? 6,000 units. At what price per unit? 2 rupees. This happened at year beginning. Okay. At the end of the year, is the goods ka index same or it changed? When you purchase the goods, by paying 2 rupees, index was 100. But at the end of the year, index is not 100, it has become 120. That means at the end of the year, the price of the goods will not be 2 rupees. It would have changed. How much is this? How do you find X? 2 into 120 divided by 100. How much is that? 2.4. That means at the end of the current year, 1 unit of the goods will cost you how much? 2.4 per unit. How many units did you trade, buy and sell in the current year? 6,000. At least 6,000 you want to buy in the next year also. To buy 6,000 units next year, amount required in next year is how much? For 1 unit, we need 2.4 rupees. For 6,000 units, how much money you need? 14,400. That means money you need to keep. Correct, no? So, earlier in the current year, how much did you buy it for? This goods for 12,000. Now, to buy the same goods, you need to have 14,400. So, has the price of the goods increased? How much? 2,400. That means that much profit you have to keep. That much profit you need to keep. How much profit you made in the current year? 6,000. How much has the goods price increased by? 2,400. So in the 6,000 rupees profit, 2,400 rupees profit you retain. Balance you can withdraw. So balance will be 3,600. That is what we are trying to get through. Correct. Because you need this 2,400 extra to buy same 6,000 units in the next year. That's all. Okay, now that wala presentation we are doing in this fashion. That's all. ICAI presents in this format. So I'm trying to maintain the same. Okay. Now check this presentation if you want. What you'll have to do is first opening capital how much? 12,000. This is the opening capital when the index was 100. Now at the end of the year is index 100 or 120. So restate this opening equity using the latest index. What is the latest index? 120. So 12,000 is a number when the index was 100. When it has become 120, how much will be the capital? 14,004. Yes, Aja. This much money you need to buy the goods in the next year. Comfortable? This much money you need to buy the goods in the next year. See, that's what we got it here. Correct? That is what we mean by opening equity restated using the index. This number makes sense now? Pakka? Now find out the actual closing equity. How do you find actual closing balance of capital? Opening balance plus profit minus drawings. That's what I've done. Actual opening balance of capital was 6,000. How much profit you made? 6,000. How much you actually withdraw? 6,000. They only told last question data we have to use. They told trader has withdrawn 6,000. What is the closing balance of capital? 12,000. Sir, we need to maintain how much? 14,400. But trader maintained only 12. That means did the trader retain any money? No. Ideally he had to retain how much? 2,400. Did he retain? No. So because this retained earnings is negative, has trader maintained the capital or not maintained? Not maintained. Okay, now in some problem, they'll also ask how much maximum you can withdraw. How much maximum you can withdraw? Can you withdraw 6,000? No, 2,400 we need to retain. So hence from 6,000 reduce 2,400, you will get how much drawings you can make. But if possible, try to present in the same format. You can present any other way also, but ICAI suggested answer will be like this. So I suggest keep the same thing. Okay, sir. We have one more question. Write it aram se, don't get deviated. Try to remember the format and let's try to solve the next one in the same manner. Yeah, that's what we'll try. Now I hope everyone's understanding is better. Copy. This is more logical. Do you agree with me? Because at least you need to do the same level of activity. For that, we need to have money. Historical cost is stupid. This, I think, makes more sense. Zoom or scroll down? Scroll down. Okay. Can I keep it here or else? Is it okay? Little upward, huh? This is okay, Nada? Others, if you think you have done, you can read the next question and try to solve using the same format. How many more problems, Ada? And he's saying last one, no, sir? You said only 5, 6 problems, sir. Over, sir. Yes, sir. Yes, sir. You're right, sir. Correct, sir. Thank you, sir. I don't mind taking multiple thanks today. We will do it. I'll tell you. I'll tell you. I'll tell you. Don't worry. I don't know. Today you leave it to me. Hmm. Today and Sunday you leave it to me. Or after Sunday you leave everything to me. I'll decide. Okay. Done, people? Copying part? Can we get to the next question or anyone still writing this? Balcony, that side, this side, okay? All good. Done. Okay. Next is question number 18th. All right, people, this we can do it together. Question number 18. Same in the previous example ka data. So first we will write in the previous example, that is in question number 16, what we did. 6,000 units we purchased by pay 2 rupees. So total is 12,000. This happened at year beginning. That's all is the data. And how much has the trader withdrawn? The trader has withdrawn 6,000. That is your question number 16 ka data. Okay, keep this in mind and let's see what has happened in question number 18 now. They've used the same data and they're telling now. Suppose in our previous example, that is question 16, the price of the product has become 2.5. Now they've not given index, they've directly given price of the product. Okay, now previously we used the index and worked it out. Here directly they've given the price. You bought at the year beginning at what price? 2 rupees. We were able to buy each unit at 2 rupees. But at the end of the year, it has become 2.5. I mean, the increase is 25%. If you do 2 plus 25%, you will get 2.5. Okay. Or in other words, they're saying the index has become 125. This time around, we will not use the index. We'll work out using the price. Because if the index is given, what to do, we know, no. At year beginning, the index is 100. At the end of the year, it has become 125. That's what they're saying. So let's ignore this and try to solve using the price. Okay, first, what is the opening equity that they've given in the problem? 12,000. In current cost basis, first thing we'll have to do is you have to restate your opening cost, opening equity using your index or the price. Here we are using index or price. Opening equity index restated using price. Very simple. It's like this check. Price opening equity. When the price of the product was 2 rupees, how much was opening equity? Opening equity was 12,000. Now has the price of the goods has become 2 or 2.5? If the price has become 2.5 means what is your restated opening equity? Proportionate? Yes, sir. So how do you do that? 12,000 represents the opening equity when the price of the product was 2 rupees. When it is 2.5, how much? This is the cross multiplication. How much is this? 15,000. Any problem? Now find out the actual closing equity. How do you find out actual closing equity? Take the it's your closing capital. How do you find out actual closing balance of capital? Take the opening capital, which is actual how much? 12,000 plus actual profit. How much profit have you made in the current year? 6,000 minus drawings. Did we make any drawings? Yeah. Trader withdrew how much? 12,000. That means the closing equity is how much? 12,000. Correct? Sir, next year to buy the same 6,000 units, you need how much money? 15,000. Have you maintained 15,000 or 12,000? I means, did you retain the money here or no retention? These two minus is how much? 3,000. Positive or negative? Negative. In fact, yeah. Everybody good, 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 good. Closing equity should at least be how much? 15,000. Is it 15,000? No. Because it is not, we are saying retained equity has become negative. So trader has maintained the capital at current cost or not maintained? First conclusion is the same. Since retained earnings is or retained equity is negative, trader has not maintained capital at current cost. Can you tell me how much is the maximum permissible drawings? 6,000 as he is withdrawn. 6,000 is permitted. No. How much he has to retain? 3,000 he should have retained. In 6 met 3 he should retain means how much can he withdraw? 3,000. So 3 in 6,000 profit, 3,000 should be retained. Another 3,000 can be distributed. That way closing capital will become 15. Correct? No? And you will be able to do this activity once again in the next year. That's all is this drama all about. Okay, write this. I'll leave the screen here. I hope this stepwise much better now. Right. People finished? 1 minute. Okay. Sir, as I told, this particular topic is 2 topics in our study material. Framework for preparation of financial statement and preparation of financial statement. All this you'll see in your framework topic. But we have merged and made it as one topic. Okay. Don't say this question is not there in ICAI material. You'll find it in the framework wala topic, not in preparation. Still or done? Done. Okay. Question number 19, I'll keep it as an LDR. Question number 19, I'll keep it as a LDR. Some concept. I think I've given you this, but maybe once more I will give a few pointers. You can write. When entity is not a going concern, when entity is not a going concern, when entity is not a going concern, what and all you need to do? Yeah, I think I did mention this in there. Whenever entity going concern means what? Entity will continue for a foreseeable future, meaning at least it will continue for the next 12 months. If it is not a going concern means it will shut down. It will not continue for more than 12 months. If they tell you in the problem means, then all assets should be shown. All assets should be shown at realizable value. Every asset, doesn't matter whether it is current or non-current, whatever, doesn't matter. All assets will be shown at realizable value. All liabilities should be shown at settlement value. Point number 3, deferment of income and expense is not allowed. This you will do only when the entity is not a going concern. Next problem is on this. When the entity is not a going concern, how you need to prepare your P&L and balance sheet. That's your next wala drama. Okay. Updated till here. Can we review the next question? Matlab, can we do the next question? Huh? How many more? 2 more. So he's like, I already counted 4 already over. For the, at least let me complete the next problem at least, no macha. One more. Ayyo. Please, sir. Till 9:10 you do whatever you want, sir. That 9:30 you take. Sure. Okay, yes. Copied. Question number 19, I think next one is. Okay, this we will apply in the next question. That is question number 19. Come to question number 19. It's an LDR. We have multiple questions in study material like this. One is good enough. One, if you do it more or less, we know the concept, that is sufficient. So check this. The balance sheet of a trader on 31st March 20x1 is as follows. It's a trader. So should we have to prepare balance sheet P&L in Schedule 3 format or our old format? Trading P&L format is there, no? Account format. We'll prepare in that format because it's not a company, it's a trading concern. Okay. Capital is how much? 60,000. P&L 25. Usually for a trader, P&L you will not show separately. You will add it to the capital, but it's okay. 10% loan, 35 lakh. Trade payable is 10,000. Since it's a trader, they have given the balance sheet in this format. In solution also, we'll present balance sheet in same format. Asset information they have given. One thing catching our eye here is deferred cost. Okay. You used to have no preliminary expenditure, deferred revenue expenditure you used to get in your 11th grade and all. Same here. How much cost have you deferred? 10,000. We'll see what to do. Now check the additional information. Remaining life of property. Do we have any property, plant and equipment? Yes. Remaining useful life of this PP is how much? 5 years. Underline that. The pattern of usage of the asset is even. Even means same. If the pattern of usage is same means you will go for which method? Obviously, you will go for SLM method of depreciation. Clear, sir? Even if they don't tell pattern of economic benefits, we'll assume that SLM only. Assuming pattern of economic benefits is same any which way. The net realizable value of the property on 31st March 20x2. Hang on. This is the data given on 31st March 20x1. Now they are saying on 31st March 20x2, if you sell this property, you will get how much? 60,000 realizable value. Okay. Trader ka purchase and sale in X1, X2 is this. Or maybe quickly read the requirement. You will understand the data better maybe. You are required to prepare P&L and balance sheet for the trader in both cases. What case? When entity is a going concern, when entity is not a going concern. This question will give you clarity under both. Okay, when it is a going concern and when it is not a going concern. When it is not a going concern, you tell me, sir, what you will do? All the assets will get shown at realizable value. All liability at settlement value. Deferment of income expense, not allowed. Okay, keep that point too. Okay. In X1, X2, that means we are talking about current year. Which is our current year here? In X1, X2 means current year will begin on 1st April 20x1 and it will end on 31st March 20 X2. For this particular year, we need to prepare trading account and P&L account under going concern and not a going concern wala case. What is the purchase in the current year? 4 lakh. Sales is 4.5 lakh. Okay. Cost and NRV of the stock as on 31st March 20x2. End of the year, cost of the inventory is 32. NRV is, or realizable value is 40. Expense, once I'll read, then we'll again go back and capture the relevant components. Expense including interest on 10% loan is how much? 3,500 for the year. How much is the total expense? 14,900. This 14,900 includes the interest of how much? 3,500. So that's fine. Total expense is 14,900. Deferred cost, that is this 10,000, is amortized equally over 4 years. That means every year how much you are amortizing? 10,000 you are amortizing over 4 years means every year 2,500. That's what you've been doing. I mean, that's what you want to do. Trade receivable as on end of current year, that is 31st March 20x2 is 25,000, of which 2,000 is doubtful, provision for doubtful debts. Collection of another 4,000 depends on successful reinstallation of a certain product supplied to the customer. Customer is saying, I will pay you this 4,000 only if you do some reinstallation activity. Maybe old installation was not proper. Hence, customer is saying, reinstall it, then only I will pay 4,000. Otherwise, I will not pay. Okay. Closing trade payable is 12,000, which is likely to be settled at 5% discount. Okay. Cash balance at the end of the year is 37,100. There is an early repayment penalty of the loan. How much? If you repay the loan early, then bank will say you should not pay me 35,000. You should pay a penalty also of 2,500. So total payment will become 35 plus 2,500. That is 37,500. That will come only if you pay early. That's all is the data. Okay, sir. Okay, so we can do it parallelly over here. Question number 19. We need to prepare trading and P&L account. That's a requirement, right? Yeah, trading P&L or P&L and balance sheet. So I'll write it as P&L account of a trader for the year ended. What is the current year ended? 31st March 20 X2 for the current year ended or year ended 31st March 20 X2. If you want, first you can prepare going concern ka P&L separately, not a going concern ka separately, or I think we can merge and do in columnar format. That will be faster. Can we try that? Okay. Normally, what is trader ka P&L format, sir? Particulars amount, particulars amount. But here I'll do under two cases. Particulars. So first case, what they told? Assuming going concern. So first is a going concern. If the entity is a going concern, how will you prepare? And when the entity is not a going concern, what will happen? Replicate the same column on the credit side. Particulars going concern, not a going concern. Okay. Debit to credit to make this column and keep ideally, it's always better to have also a balance sheet format so that as and when we see, we can push the data also into the balance sheet. Can we try that way? Okay, so leave around maybe like 10 to 12 lines. Okay, then have balance sheet format. Have all of you made P&L format? Balance sheet format also same in two cases. When it is a going concern, when it is not a going concern. Maybe I'll write it here. Balance sheet of a trader as on what date? 31st March 20x2. You can leave 8 to 10 lines and then make this. For a trader, we can use T-shape format. Yeah, for a trader, for partnership firm, this is acceptable. For only for a company, follow Schedule 3 format. For sole proprietor, partnership firm, you can follow this. Okay. What do you used to write for balance sheet format? Liabilities amount, assets amount. Don't write liabilities amount, write liabilities and the next will be going concern and then next it will be not a going concern. Similarly, on the other side, you'll write assets, then going concern, not a going concern. Ah, my format is ready. All about yours? Done. This one, we don't have to worry about the spacing. Anyway, it's a second table, no? You can figure that out. Can we do it, people? Okay, now let's go line by line item and push it. Now visualize, or maybe trading P&L ka format order. First what will come? Opening stock. Sir, you are preparing balance sheet as on 31st March 20 X2. Yes. In the question, they have given balance sheet as on 31st March 20 X1. I mean, this is for last year. Last year ka closing balance will become current year ka opening. Closing stock of last year becomes opening stock of current year. So go back to your P&L account. This is your trading P&L together you're doing. So you'll write here what? To opening stock. How much is opening stock? 30,000. Whether it is a going concern or whether it is not a going concern, this will be same, no? Because this came from the last year. Okay, then what you will show? Purchases. How much is the purchases? They told current year ka trader ka purchases 4 lakh. Sales is 4.5 lakh. Whether it is a going concern or not a going concern, your purchase goods for 4 lakh only, no? So same. And sales, will it change or same? Sales under going concern and not under a going concern is same. Only three simple rules, people. If it is not a going concern, all assets at realizable value or liabilities at the end of the year. Okay, end of the year, all the assets. This rule is applicable at the end of the year. All the assets at year end will be shown at realizable value. All liabilities at the end of the year will be shown at settlement value. At the end of the year, expense and income you should not defer. Okay, this all is a simple funda. Okay, next what they have captured. Or is it okay that I go line by line and do it? Would you be comfortable with that? So that way adjustment is also sorted. Okay, check the screen everybody for a minute then. Sir, how much is PPE ka value? 65,000. Last year ka closing balance will become current year ka opening balance. Okay. How much is the life of the PP remaining? 5 years. That means calculate. If entity is a going concern, should we have to worry about anything or normal way? Normal way. 65,000 is asset ka value and asset has a life of how many years? 5 years. That means will you depreciate the asset? Will you depreciate the asset? Yes. How much? Is depreciation as an expense? Yeah. Now I will not write trading P&L ka split. I will just do it together. Okay. So I will capture next expense what? Depreciation. If entity is a going concern, you will calculate the depreciation in the normal way. What is asset ka value? 65. How much life remaining? 5 years. So are they given residual value? No. So how much is this? 65,000 is the carrying amount of the asset minus residual value not given 0. Sir, don't take 60,000 as a residual value. Prabhu, residual value means the asset value at the end of useful life. Here, life of the asset will come. Will the asset ending now only or after 5 years? This is the realizable value now. If you sell the asset today, you will get how much? 60. We don't want today's realizable value. We want residual value at the end of the useful life, meaning after 5 years. Is that given? Not given. So assume to be what? 0. Carrying amount 65, residual value 0 divided by remaining life 5. How much is this? 13,000 will be the depreciation. Any problem? Everybody good? Now, for a minute, check everybody. Is it okay? Parallelly, I can complete or you want me to do going concern first? Parallelly is okay, not confusion. Okay, now check. If entity is not a going concern, all the assets at the end of the year should be reflected at realizable value. Currently, what is PPE ka value? last year ka closing balance will become current year ka opening. So current year PP is shown in our books at 65. If entity is not a going concern, can you show it at 65 or realizable value? At the end of the year, what is realizable value? 60. That means from 65, you'll have to bring the asset down to 60. From 65, you need to make it to 60. So asset value increasing or reducing? That means how much depre you will charge? Okay, now how? From 65, you need to bring it to 65, you need to bring it to 60 means how much is the reduction? 5,000. That only will be accounted as depreciation in the second case when the entity is not a going concern. Understood? That is what I meant by when entity is a going concern, normal accounting. What you've been doing, normal. But if entity is not a going concern, every asset at the end of the year will be get shown at realizable value. Currently, PPE ka value is 65. From 65, bring it down to realizable value of 60. So reduction in the value of the asset is 5. That you will account it as depreciation. Done, Naji? Okay, next. Point number 2. Purchase and sale. Did we already account? Yeah. Now, cost and NRV of the stock as on 31st March 20 X2. This is at the end of the year. End of the year, we have an asset called closing stock. What is the cost of the closing stock? 32. NRV is 40. Sir, if entity is going concern, if the entity is going concern, you will do normal accounting. How should the normally inventory be valued at? Cost or NRV, whichever is low. Cost is 32, NRV is 40. You will record it at 32. So closing stock comes where in trading account? By closing stock. Yes, Ajay. At what value will it be recorded? Cost or NRV, whichever is lower. 32 or 40, which is lower? 32,000. This is the case when entity is a going concern. Paka. If entity is not a going concern, if entity is not a going concern, at the end of the year, every asset will be reflected at realizable value. So this is year-end ka stock only, no? If entity is not a going concern, will you value it at cost or NRV, whichever is lower, or directly NRV? Directly realizable value. How much is that? 40,000. That means in this case, my closing stock will get valued at 40,000. Why we do this is, if entity is not a going concern, will you keep the asset or sell it? Sell it. Hence, all the asset at realizable value. And all the liability you will have to settle. So hence, show it at settlement value. Since entity is not expected to continue, don't defer your income and expenditure. It's a basic common sense rule actually. Everybody, okay? All right. Online also, I'm thinking you guys are good so far. Okay, then next point. Expenses. So, including the loan amount, it's fine. How much is the expense? 14,900. So, expense is normal. Expense comes on which side of trading account? Debit side. How much is that expense? 14,900. Whether it is your going concern or not a going concern, expense will be recognized. No. If it is not a going concern, you cannot defer. That's all. Here, are we deferring or this is a normal expense? Normal expense. Both the cases may you'll record 14,900. Easy, Sarji. Okay, next one. Now, what is the next point? Deferred cost is amortized equally over 4 years. So last year, how much deferred cost we have? 10,000. In the normal case, you are transferring this 10,000 to 1 year P&L or 4 year. So how much every year? 10,000 divided by 4. How much is that? 2,005. This way, call it as deferred cost. Yes, no. 2 deferred cost. In normal case, you will amortize 10,000 over 4 years. How much will be the amount? 2,500. Meaning when the entity is a going concern, every year in P&L you will book 2,500 expense. This will continue for 4 more years. Yes, Ajit. If entity is not a going concern, 10,000 you will defer or immediately. Entire 10,000 you will have to book it in that year. Because there is no next year. No? If there is no next year, everything has to be accounted in the current year. The deferment of expense will not be allowed in not a going concern wala case. Clear, Sarji? Okay, next point. What is the next point? To trade receivable. Uh, as on 31st March 20x2 is how much? 25,000. Okay, let's read it. Of which 2,000 is doubtful. 2,000 is doubtful. Collection of another 4,000 depends on successful installation of a product. Yes, sir, Ji. Okay. If the going concern assumption is valid means I'll come back to the asset so and write debtor. So what will be the balance of debtor you will show in balance sheet? Will you show 25,000 or 2,000 provision is there? 2,000 provision is there. 25,000 minus how much? 25,000 minus 2,000. How much will be that? 23,000. Clear? Yes, people? Huh. If entity is not a going concern, if entity is not a going concern, now you tell me if you have no intention to continue the company only, will you do this reinstallation activity? Because one of the customer is saying, I will pay you 4,000 only if you do the reinstall. Company only, we are not interested to continue. Will be interested in the reinstallation process? Doubtful. So in that case, do you think you will collect this money from debtors or Goinda? Goinda. That means what will be the trade receivable balance if it is not a going concern? 25,000 must minus 2,000 doubtful, and this 4,000 also looks doubtful because we may not do this reinstallation activity. Yes, no. In that case, this will become 19,000. Any problem? If you want balance sheet, you can tick. They also prepared in the same fashion. I think even P&L also they're doing in same fashion only. Okay, now everybody. Yeah, but I still feel like it's okay. One problem is better maybe if you write it. So far, good. Okay, that means you tell everybody if it is a going concern, how much is provision for doubtful debts? 2,000. Provision for doubtful debts also is an expense. Will it come in P&L? No space. Okay, I will write here to provision for doubtful debts. If entity is a going concern, how much do you think will be provision for doubtful debts? Only 2,000. This number. Yes. Because if entity is expected to continue, then maybe we will do this reinstallation. So that means we'll be able to collect this amount. If entity is not a going concern, then doubtful amount is 2,000 or 4,000 also. That means if entity is not a going concern means it will become 6,000. That is 2,000 plus 4,000. So in that case, expense will become 6,000. Clear, Sarji? Right. Okay. Next, what else is there next to? Closing balance of trade payable is 12,000. That's okay, which is likely to be settled at 5% discount. Okay. Now, if entity is not a going concern, can you push the creditor amount or settle immediately? If you pay immediately, creditor is ready to take 12,000 or he'll give you discount. He'll give you 12,000, 5% discount. That means will settlement value be 12,000 or 5% lesser? Creditor where it will come? In P&L balance sheet? Balance sheet. Balance sheet, I'll leave 2-3 lines and then write creditors. If entity is a going concern, then we will pay on the normal date. If you pay normal date, will you get discount? No. That means how much you need to pay? 12,000. But if entity is not a going concern, then we'll settle the creditor immediately. In that case, we will pay 12,000 or we'll get 5% discount. We will not pay full amount, 5% discount you will get. How much will be that? 11,004. Yes, sir. Sir, discount received from creditor is also an income. Will income come in P&L? So go back to your P&L and write what? By discount from or discount received from creditors. Will you receive discount under going concern case? No. In going concern case, you will pay the amount to creditor on the normal date where you will not get any discount. Discount you will get only if you immediately settle. So discount income will only come in not a going concern case. 600. How is it 600? 12,000 ka 5% discount. So hence 600 rupees will be your income only under not a going concern wala case. No confusion? Baka? All right. So balance sheet also we have updated. Next, what is there, pa? Cash balance. Cash will come in P&L or balance sheet only. So directly go to balance sheet and write cash balance. How much is that? This is the cash available, no? Whether it is a going concern or not a going concern. This much cash you do have, right? So 37,700, same under both the cases. Anything more given or that's all? In fact, one more is there. There is an early repayment penalty for loan. How much? 2,500. If you repay the loan early, then you'll have to pay how much penalty? 2,500. Okay. So that means this is a expense. So will it come in your P&L? Sir, when will you repay the loan early? When entity is a going concern, all the settlement you will do it on the proper date. If entity is not a going concern, then every liability you have to settle immediately. So this penalty will come only if you settle the loan early. Early settlement, when it will happen? In going concern case or not a going concern? Not a going concern. How much penalty you have to pay? 2,500. Will it come in going concern case? No. It will only come in your not a going concern wala case. Pakka. Everybody. Getting the surgery? Okay. Loan is the liability, right? It will come in your balance sheet. So how much is the loan amount you have taken? Look at the balance sheet. How much is the loan? It's a 10% loan. How much is the loan? 35,000. In the normal going concern case, you will pay 35,000 on time. Loan balance will be 35, or have they given any different balance? No. If entity is not a going concern, will you have to pay 35,000 or you have to pay extra? Because if entity is not a going concern, you have to settle this loan early. If you settle this loan early, there is a penalty. How much? Sir, why will bank charge penalty for early settlement, sir? Sir, bank will decide the interest rate based on the term. If you are taking, let's say, 5-year loan, then bank may give you at 10%. If you say you want loan only for 1 year, it will not be 10, it may be 15%. So bank decided the interest rate based on the term. Now, are you following the term or settling early? Settling early. So some banks, if you settle the loan early, they will charge prepayment penalty, they call. Some penalty. Here penalty is there. How much? 2,500. That means will you pay the loan at 35 or you have to pay extra? You can't pay it at 35. You have to pay 2,500. Huh? Okay. That means how much you have to pay if entity is not a going concern? If entity is not a going concern, you will settle early. Because you are settling early, you have to pay 2,500 penalty more and it will become 37,500. Clear, Sarji? Okay. This is done. Anything else? That's it. Now close your P&L first and tell me what is the total. Profit or loss? Which case you're telling me? Which, if it is going concern, debit or credit side total? Which side is more? Credit is more. How much? 4 lakh? 4 lakh 82,000. This side also should be 482. Is it 482 or you're getting balancing figure? That is your net profit. To net profit arrived as balancing figure 19,600. Okay. If entity is not a going concern, what is the total? 4,90,600. Okay. Check the solution and tell if the totals are right. Later, don't tell numbers wrong. Anta. 22,200. That will be the net profit arrived as balancing figure in not a going concern wala case. Guru? So far, okay? All right. Now, balance sheet. Balance sheet mein first liability side mein you also capital. How much is the capital that they have given people? 60,000. Will it change? No, this is capital already introduced. No. So it will be 60, 60 and both cases. What about P&L? P&L mein, if you want, you can give a breakup. You can tell how much is the opening balance and how much is the current year ka profit. Both you can show it. P&L. How much is opening balance? Or I don't know how the ICAI is doing it. Okay. How much is the opening balance of P&L that they have given? 25,000, 25,000. Will this change or same? Same. Then you will get add what? Current year ka profit. Current year ka profit, you will get it from your trading P&L. How much is it? 19,600 here and 22,200 there. Any more liabilities to be captured or that's it? That's it. I think asset 1 or 2 we have not captured it. Closing stock and PP are not yet captured. Updated till here. Now check, always again refer back to the question. Capital captured? Yes. P&L? Yes. Loan and trade payable? Yes. Asset side, PP, have you shown? Not yet. So let's show that. Property, plant and equipment. Under normal case, mein PP will be shown at what value? 65,000 minus depreciation. If an entity is a going concern, how much depre? 13,000 is your depreciation and PP ka balance will be 52,000. Correct, Aji? Take the normal balance, reduce depreciation, done. If entity is not a going concern, all assets at what value? Realizable value. What is the realizable value of PP at the end of the year? 60,000. It is given. So in that case, it will come at 60. Or you can also take 65 minus how much depre? 5,000 depre. You'll automatically get 60,000. Clear? Then what are the other assets? Stock. Closing stock, I think we have not yet shown. Closing stock is there in your trading account. Copy from that. Closing stock. If it is a going concern, closing stock will be valid at normal basis. Cost or NRV, whichever is lower, which is 32. If it is not a going concern, directly at net realizable value, which is 40,000. Okay, PP is shown. Come back to the question. PP captured, stock captured, trade receivable captured. What about deferred cost? What about deferred cost? Here we'll deferred cost. How much was deferred cost ka opening balance? Last year ka closing balance will become current year ka opening balance. In the normal case, are you transferring this deferred cost entirely to P&L or deferring over 2 years? Every year you are only transferring 2,500. That means in 10,500, how much went to current year P&L? 2,500. So how much will be your deferred cost balance? 7,500. This is when the entity is a going concern. When the entity is not a going concern, what did you do? Did you transfer 2,500 to P&L or full amount? It was 10 and full went to P&L. So what will be the deferred cost ka balance? 0. Because deferment is not allowed in case of when entity is not a going concern. Anything else is there or that's it? Bank balance, that was given only. So I think balance sheet should match. Give the total. This going concern, how much? 1,51,600. Both the side are. When entity is not a going concern, anyone has a balance? 1 lakh? 1,56,100. Both the sides. Problem over. I hope this gives you a little better idea as to how we need to prepare when entity is a going concern and when it is not a going concern. But usually in exam, what they will ask is, they will not ask both. They'll ask when the entity is not a going concern, prepare trading and P&L. So they'll only ask this column. That's the more popular option. Both coming is rare. But we have done both, so we have that comparative analysis. So yeah. All right. Anyone still copying or done? Done. Okay, one last one we will do and we'll leave. Question number 23. Theory, 2 minutes. Question number 23. Come to 23. This is not, actually it is there. It is there in AS7. When you did construction contract, I told one question relates to preparation of financial statement. There you can, if you flip your books to construction contract, AS7, you'll see this question. It's actually this chapter ka question by mistake got uploaded there. I don't know which question is there in AS7. Which one? 14th. All of you open AS7 topic, construction contract, refer question number 14. You'll find this. I've copied in AS7 topic also, here also now. You'll find it both the places. I found it. Okay, now people, you remember, or maybe let me get your memory back there. Current liability ka there were 4 features. Anybody remembers? When can you call a component as a current liability? Held for trading purpose. It is expected to be settled within operating cycle. Expected to be settled within 12 months from the balance sheet date. Company should not have unconditional right to defer the payment beyond 12 months from the balance sheet date. Yes, no? They should not have a right to push the payment beyond 12 months. If that right to push is there means non-current liability. If that right to push is not there means current liability. Application is that is this question. Okay, Nasarji. Question number 23. Sagar Limited, one company, they've issued convertible bonds for how much value? 65 crore, which are due to mature on 30th September 2018. While preparing financial statements on 31st March 2018, I'll not even bother reading anything further. Sir, current year is ending on what day? 31st March 2018. This debenture itself is getting matured on what day? 30th September 2018. Sir, what is a current liability? Something which is expected to be settled within 12 months from the balance sheet date. If you count 12 months from the balance sheet date, it is 31st March 2019. Are these debentures getting redeemed before that? Yes. You can redeem or you can convert, doesn't matter. You can repay the debenture holders their money or you can convert it into equity shares. Is the redemption or conversion happening within 31st March 2019? Yes, that means what? Obviously, this is what? Current liability. Now they will give blade. This person has conversion or that person has conversion. Faltu. Conversion will happen within 12 months. No. So what is the answer? Current liability. But still, for the sake of it, we will read. Company expects, these are convertible bonds. No. Conversion option company could have or investors can have. Whoever can have that conversion option. Okay. The company expects bondholders will not exercise their option of converting bonds to equity shares. Maybe company does not have this conversion option. Company has told the bondholders, you take a choice whether you want money or equity shares. We are telling the debenture holders on 30th September 2018, I will give you 65 crores in cash or I will give you 65 crore worth equity shares. You decide what you want. What is the company expecting that will happen? That the bond holders will go for what? Conversion option. Huh? No, they're saying they will not exercise conversion option. That means we will settle by cash. How should the company classify this bond? Okay, how should be the classification? Doesn't matter whether you are converting or whether you are paying cash. Redemption is happening within what? 12 months from the balance sheet date. So it has to be what? Current liability. So first case, the answer is it has to be classified as current liability. Also state whether convertible bonds will change if company expect that the bonds will convert it into equity shares. Doesn't matter whether they convert or whether they don't convert. Redemption though is happening within 12 months. So in every case, it is what? Current liability only. So still the answer or classification is what? Current liability. They have given first current liability ka features. Then finally they have told in this situation also you should classify it as what? Current liability. Basically in every case it is what? Current liability. Doesn't matter who has the option. Doesn't matter we are settling by cash or doesn't matter whether you are settling by shares. Since settlement is happening within 12 months, it is a current liability. Thank you.